Hi, this is Dr. Dizzering live from Long Island, New York, where the weather is cold, where it's windy. We had such a fierce wind that I parked 2 blocks from where I had to go this morning, and I had to walk backwards. I was afraid that I'd have a misstep, but I had to walk backwards. I couldn't make progress going forwards. The wind was pushing me back. So backwards, I got there. But could you imagine 2 full blocks walking backwards? March is known to be the windy month, and especially in certain parts of Long Island, it really does kick up. I'm adjusting my seat. Sorry for that. The seat I use is on wheels, so it's easy to slide around. Anyway, Wall Street needs a bit of adjusting, and that's what's happening. We're seeing an adjustment down, a downward adjustment on Wall Street. We talked about this for just 11 minutes yesterday. I had a bunch of charts ready to show you, but my computer was really acting flaky, which is still flickering a little bit, but I think we can get away with it. So let's get to the video charts before my computer gives out. I have about 12 names that I want to look at, and beginning, of course, with the Dow Jones Industrial Averages. Oh no, I'm talking and my lips aren't moving. That's a very bad sign. Let's see what happens. Let's see how far we get. I don't want to give up. It's not even sharing. Oh, there we go. Okay, we're sharing screen. Let's hope. Let's hope for the best. Dow Jones Industrial. What I'll do is I have 12 windows open. So after I talk about one stock, I'll close that window and go on to the next. And maybe it'll get better as the vlog continues. But for now, it's loading very, very slow. Not a good sign at all. So let's see. The Dow, of course, took a hit, 1.75% yesterday, 460 points. And the question is not what it did yesterday. That's fact. The question is, what's it going to do for us on Monday? Now, I think I have a fairly good idea, but let's wait for the chart. Hopefully it will come. Hopefully you can hear me while it's loading. There's a lot of hopefullys going on right now. I'm getting less and less hopeful. I may have to, I don't want to say it, but I may have to cancel this video too. Let me try reloading. I can't even get in to try reloading. This is not good. So I guess I could do like a podcast. No, I'm kidding. I really need the video. If you're on now, I'm afraid you might be seeing either an all white screen or an all black screen or a blue globe, but you're not seeing the chart because I'm not seeing the chart either. I don't know what to do about it. In fact, my browser is frozen right now. I guess I was over ambitious trying to do 14 of them. Oh boy, now it went away. Try it again. I don't know if it's Verizon's fault, my fault, the computer fault. It's not my fault. What did I do wrong? I opened too many windows. So I guess it is my fault. Oh, wonderful. Let's not start with the Dow. Let's start with a different one. We'll start with Amazon, see if that helps. Amazon. It's loading, it's spinning. Oh, come on, Amazon. I'm rooting at Amazon. Maybe we should get a horse, buy a horse, and name him Amazon. Maybe he'll win the Triple Crown for us. All right, let the gray-haired guy, Baffert, train him, right? Baffert wins a lot of Triple Crowns. That's Amazon loading into the stretch. Full screen. So now we have to wait another half hour. You know, I'm really upset about this. I'm not sure that if I had a supercomputer, it would be any different. But maybe. All right, so here's Amazon. It had a huge run of about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, where it topped off above 1800. And we have this big red candle. By the way, this is my favorite pattern is to have a big 10-day run, virtually all green, make a high on the 10th day, and then get a big red candle. You know what it's my favorite pattern for? You guessed it, to go short. Even though I don't go short biotechs, occasionally I do short other stocks like Amazon, although I hate to short Amazon because I think Amazon is Amazon and you don't fool around with Amazon. But this is a pretty compelling candle. It's a very big, full red candle that came on the 11th trading day. It's like my perfect setup. Makes me want to short it, but I would want it to come back midway, maybe first to about, I don't know, 1780, 1785. I think we'll get a morning rally that you could then short afterwards, maybe as high as 1790. You gotta be nimble. Remember I said nimble Norman? You gotta be nimble when you're shorting stocks, when you're using instruments like the FAZ, TWM, 2 times, 3 times the averages. So we're going to look at those kind of charts too in a few minutes, but we're starting with Amazon. So where would I play it to? Well, the answer is where to cover your short. Well, if you're really a gambler, you don't cover it until you hit the RSI of, let's say, 30. Whenever that happens, you cover your short. Another way to play it is when you hit the low of the 10 days, which is also support, that's a good spot to cover. So that would be 1590, let's say. So you short at about 1790 and you cover at about 1590. That's a 200-point short. That shouldn't take as many days as it took to go up. So if we're going to have a sell-off, it's usually quick and sharp. It might happen in 3 days. So for a 3-day trade, if you can make 200 points, that's phenomenal. Would I recommend it? Am I going to do it? I don't know. I'll think about it. As I said, I'm not keen on shorting stocks, but I do think we're going to have a pullback. I've been talking about this danger of a pullback for about a week or so. I think we've seen only the beginning of it, but I do think we'll get a head fake rally Monday morning. So it'll give us an opportunity, if you want to short even better, or an opportunity to sell something. Maybe that's another way to play it. You just decrease your overall portfolio a little bit by 10 or 15%. Then you have more cash when you think it's time to buy, when the sell-off is over. I'm not sure when the sell-off is going to be over. 1588 might not be a bad number for Amazon. Let's see if we can close this chart and look at the RUT. The RUT is a broad market, the Russell 2000. I don't often look at this. I don't remember if I have it charted or not because of the computer woes. I didn't open them up to full charts full screens. So I'm trying to do that now, and it's spinning up on top. There we go. I'm hoping that you're hearing me. I really am. It would be horrible if I do this for nothing and then I have to delete it. It would be wasting my time, wasting your time. And in any event, it's not a clear-cut pattern the way the other one was, but the rut didn't have the kind of run Amazon had. The rut had a run to a high of 1602. It's already given back 100 points. Yesterday, its high was 1569. So it had given back 30 points yesterday. It looks to me like the same thing is probably true. If you want to short this thing, one way to short it would be to buy the TWM. And we'll talk about that. But it looks like there's a possibility that it goes down to probably 1441, this level here. So I did draw the lines. So, you know, I have a feeling it's going to be the same for many of these pictures. The only one I'll give you a hint. There's only one or two or three of the list that I know I'm kind of long on, despite the bear market. So the averages, I think, are going down, especially if that 90-day, 10-year cross remains. You know, also, I forgot to mention yesterday, the PMI was very bad. So the manufacturing index showed signs of weakness, which is a prelude to recession as well. Couple that with the 90-day Treasury crossing the 10-year Treasury. So that's two signs of recession. This general slowing in the economic predictions of most of the banks, talking the second half will be slower than the first half. So who knows? We could have a recession by the end of the third quarter of this year, or my guess was a year. But with this kind of a rate cross, sometimes it takes 2 years. So it's very hard to predict how long before the recession. But I'm going to stand by my original guess, and that's all it is. 1 year and we're in a recession, 1 year from now. Does that mean we're done going up? No. What the stock market does and what the economy does are two different things. I'm not saying that the stock market is going to zoom when we're officially in a recession, but I am saying that until we are officially in a recession, at least over the next 6 months, we could have a very strong finish to this bull market. So don't dismay if you're still long. I mean, you could for defensive purposes adjust your portfolios, but I think there's ways to go. Okay, so yeah, we looked at the rut. I don't want to dwell on this too long. Let's look at the Dow Jones Industrial Average if I can. Now, you know what? Let's look at the FAZ. This is a sector 3 times short fund, the financial bear, and that makes up it's composed of banks and hedge funds and so on, I guess. So let's take a look at the chart here. Notice the 52-week range is basically 880 to 1699. So it's basically doubled from peak to trough, it's doubled. Let's take a look at where we are now, closer to the trough at 992, even though it was up 61 cents yesterday. 6.55%. That's what makes this so tempting to day traders. You can get a pop, make 7% in a day, something that you don't typically get in most stocks. Also, it's the kind of thing that is extremely volatile. So even within a day, you could be in and out of this 3 times. So what do I think is going to happen? I think we're going to start taking out in a stepwise fashion all the lower, we made a series of lower highs. Let's start with this one. This high was 1118. This high was, wait a second. This high was 1118. This high was 1064. Then we have this high here, let's say, 1027. And then that's it. So I think we begin by taking out 1027 and work backwards, taking out each of these highs, taking out this high of 1118, and continuing to work our way up, taking out the high on 13, all the way back there, 1431. So yes, what I'm saying is we have the potential to undo much of the gains in the financial sector. I notice it's a 3 times fund, so it may not take that long to get back up there. Notice it's the opposite of most stocks that go down quicker than they go up. This goes up quicker than it goes down because it's an inverse fund. And the mathematics of these things are usually such that you shouldn't be in them long unless they're extremely hot, because basically because of the mathematics. I don't want to go into it, but take my word for it. So I think we go up to 1427 area. That's probably enough. If you're happy with a 4.5 point gain, then maybe you want to buy some of this. I'm probably going to not buy it because I'm very leery of these 3 times ETFs. The same is true with the TWM. The range for the year is 13 to 23, not even double from peak to trough. If we have a steep sell-off now, you will make some money going. Make 20% on your money in short order, trying to load it. Another thing you could do is, instead of going long the TWM, you go short the IWM. And that's a conservative play. You could even go short via puts. Okay, here we have a big, whoops. We had it for a second. It was up a buck, 7%, big move yesterday, on Friday. Look at that big green candle, undoing about 10 days of trading, undoing the high of 1620 on 3/8. So where are we going from here? A little pullback, probably maybe halfway. And then we take out this high of 1667, followed by this high of 1783. And maybe even retrace the whole loss, or at least part of it, probably the whole loss eventually, to 2355. So you could see a full swing back to 2355 in no time. It took a lot of time, from 1224 to get down to where we are now, but to get back to the 2350 level may only take weeks if we have a bit steep enough sell-off. I don't know how steep it'll be. Probably not that steep. Hopefully not. Hopefully it levels off right around here at a high of 21. So you're basically looking for 5 points. It's still a nice gain. and it's a way of protecting your lungs. I see it more as a way of protecting your lungs. Another way to protect your lungs, of course, is to write call options. There's many ways we can protect ourselves. So we're going to talk about different ways of protection. I mean, even in the drugstores, they sell protection rather cheaply, right? You need protection. You shouldn't be foolish and go totally unprotected when it looks like there's a downturn in the making. So you protect yourself in a variety of ways. SRNE. This is the one that I'm kicking myself, because if we open it up and look at the full screen, you'll see how close I was to a perfect trade. I didn't quite hit it perfect. I said on Thursday, if it pulls back to 445, you buy. And look at that, it just missed. It pulled back to 455. I mean, I said 455, you buy. It pulled back to 467. Had I been home instead of at the mall, I probably would have been in this stock, riding it all the way up to 650. And if I was really nimble, out in over 6 for a one-day gain. I don't often look to swing trade in a single day. That's called day trade. But every so often, I can't help myself, and I take profits the same day. I don't do it too often. Sometimes I take losses the same day. Again, not too often. So what do I think is happening here? I think the fundamentals look great. There's a subsidiary that was almost fully owned by them, 3/4 owned by Sorrento, into non-opioid drugs, merged with another such company, and the synergy between them looks phenomenal. It looks like a very good merger, and Sorrento will own something like 55% of the new company. So you got to kind of like it fundamentally, but if that's what drove it, it probably isn't going to sustain it, and it'll probably come back down to that 455 level again. So my guess is it'll come down there to the 455 again. Will it hold support? Maybe. Might be a good buy at 455. Not a good buy here, in my opinion. Biopath. Inexplicably up $3.50 or 19%. Highly speculative stock that day traders are having a blast with, and investors are not suffering with, but getting a little bit ulcerative colitis. That's a nasty form of colitis, the ulcerative type. In other words, this stock with its ups and downs can give you stomach woes of the worst kind. So what to do about it? It looks like it held support rather nicely. $17, low there, $17.40 to low there. So we have a double low at about $17.40. I like double lows. I think the fundamentals of this stock, despite the volatility, despite the craziness, despite all the reverse splits, despite everything, they have a delivery system, they have a platform for their lead drug candidate, prexigebersen, if I'm saying it right, probably not, that looks to me to be the real thing. Does that mean tomorrow we have the cure for cancer, prexigebersen? add it to whatever drug, and it'll penetrate the tumor cells better. Probably true, but I don't think that's happening tomorrow. But the delivery system is such that for both blood-borne and solid tumor-based cancers, the prexigebersen and the platform it's built on, the RNAi platform, seems to be able to penetrate the cancer cells, aiding the other drugs, which it works in combination with, to work better and more efficiently. And that's what the that's what the recent data on its that was just released showed, that for leukemia, in particular acute myeloid leukemia, there was a big jump in complete responses when the prexigebersen was added. Very good news. Let's see what it's worth in the long run. In the short run, it's worth ulcerative colitis, but in the long run, it may clear up that ulcerative colitis and make people rich and make people better. But that's the long run. In the short run, it might come back and test that low again. I hope not. I hope it just continues on up for those who are still in it. I am not in it anymore. I sold the last of it on Friday. I think Friday. Or maybe the day before. I don't remember. I guess it was Friday. I sold it in the 21s, I think, or the 22s. Will I buy back? I probably will. If it comes back down to like that 1850 area, well, maybe even where it's trading at, I may get the urge and come back in. I do like this over the long term. Short term, if there's a big market sell-off, we could see it fill this gap at 1460, which would be more pain for shareholders. Hopefully not. If I do come back in, it'll be just with a small amount. Let's look at Cielos. I think the fundamentals are somewhat similar. I think it's a cancer drug that I'm not sure what exactly they're doing. I don't want to give the wrong information, but I think they're also in blood-borne cancers, and they're also presenting the end of the month, Cielos. And they also have a similar ulcerative colitis chart. I shouldn't use such a nasty disease. Let's just call it diverticulosis, which is less nasty. Cielos. I'm trying to load the chart. While the chart is loading, I'm going to try to see if it's a blood-borne cancer. I think it is. I should know the fundamentals better. I apologize for not. I don't know. I don't remember, and I'm having trouble finding it. So let's just look at the chart. Okay, we went up off of a miserable candle, a gravestone doji, but it was at the bottom of a downward spiral. So it didn't really mean much. It was just another doji. But now we turn in another gravestone doji with a much bigger upper shadow. I don't like that one bit. I don't think the stock has much left. I think it's going to retest the lows of Thursday at 218. So I'm negative on the stock. I think it's in a downward corrective phase. Maybe you get a pop before the presentation. Again, I'm not up on the fundamentals. I could change everything. So my take from the chart is negative, but I have to apologize as to the fundamentals. Somebody wants to fill me in, please do. Write a comment. Fill us all in as to why I'm wrong, that it's really a buy. Torchlight energy, and believe me, I hope I'm wrong. I don't have to be right all the time. Sometimes if I think a stock is going down based on a chart and it goes up, I couldn't be happier for the shareholders of that stock, especially if it's a biotech that's trying to cure some deadly disease. I don't have to be right all the time. In fact, I've been too right lately. It's kind of scaring me, kind of freaking me out. The percentage of times that I've been right is actually getting on my nerves. Maybe I'll purposely be wrong just to be normal. Let's quickly draw a trend line on this one. Buck Creek, Buckhead Creek. Asked for this one to be charted, so I will to oblige. We're in a clear downtrend after being in an uptrend. So the uptrend looks like it's over, and it looks like we're resuming a downtrend. This downtrend that took us down as low as $1.20, I think has been clearly broken with the high that it made on 319 of $1.80. So this was not a terrible doji because of the long lower shadow, but I'm not happy with this chart. I suspect with a weaker market, it'll just drift down along with the market. It should find support. It could find support at the bottom of this long-legged doji. So it's possible that we'll get a picture something like this. And this is about the best I would hope for, I think, that we get something like this. And that it fills in this triangle all the way down to $1.49, maybe up to $1, maybe it's around $1.55, maybe, and then breaks through to the upside. That would be great. So I could see it drifting down. If you want to accumulate this thing, maybe now is the time in a weak market. And if your timing is right, you might catch a nice breakthrough back to the $2 level. So I'd be looking to buy lower if you want to go long. And I would look to sell at least half my position at $2. It's easy to give the advice to sell half your position, but how many times have I said I'm going to do it and don't do it, only to be sorry later? It's not bad when you hit your target to sell at least half your position or 3/4 of it. Or all of it, depending on, what your target is. I mean, you could have more than one target. You could have a short-term target and a long-term target. That's okay. But you really should think it through, and it should evolve over the course of the trade even. So I'm not terribly down on this particular stock based on the chart. I think it shows potential, especially if you can get it at a lower price, maybe 150s. I mean, it traded down to the 150s yet on Friday. I don't see why it won't trade down there again. What's going to keep it up? Again, I'm not familiar with the fundamentals or the news. So if there's some big news brewing over the weekend that I don't know about, maybe it'll go, maybe it won't do that, But from the chart, to me, it's going to drift down. And then at some point, maybe around the 5th of April or later, maybe around the 9th of April, break out of the triangle, hopefully to the upside, and all the way back to that $2 level. So I'm negatively bullish on trch. Does that make any sense? Or I'm bullishly cautious or some such combination. I'm bullish to 20, but I think it's first going to touch 150, 155. But I think it could have potential to come back up there to the $2 area, not 20, $2. What does this company do? Write me a little comment on this. I can't look up everything. So Buckhead Creek, see if you can just fill me in on what they do. You said it there, not a biotech. What are they? What do they do? And what are their prospects? So you fill us in on the fundamentals a little bit. AMD was another request from, who was it from? I'm trying to remember. From, I'm going to remember who requested AMD. Come on, what's with my memory? It was, I think it was Newell. Newell, did you request this one? Be charted? I think so. Newell Chen. Let's take a look at the full screen. AMD is the battle of the bulls and the bears.